right now, when a lot less people are investing in housing, when a lot less people are as confident, a lot less people have access to liquidity, that's a great time to invest. And that's the environment we're in today. There's a really great, interesting data you could study of example, like when the most people are investing in the stock market is the worst time to invest, right? When everybody thinks the stock market's a great time to invest, that's the worst time, right? It's at the all-time peaks where the confidence levels are the highest, right? In middle of or early 2022, before the interest rate environment started changing, every person I talked to thought multifamily real estate was the greatest investment there's ever been in the face of the earth. Nobody needed any convincing of that, right? Everybody was in it, right? And I don't like to pick on young people because I've been a young 25-year-old running a large real estate business, and people thought said things, but there were guys 23 years old, 24 years old running doing real estate syndications who were in college a year or two earlier, and raising money easily to go and buy a 300 unit apartment community as if it was easy to operate and easy to manage, and meaning it was just so easy, and everybody was happy to invest, and everybody thought 20-30% returns every year was just normal. And when everybody thinks that's usually when it's not the obvious time, right? Even though that seems so contrarian. And right now, when a lot less people are investing in housing, when a lot less people are as confident, a lot less people have access to liquidity, that's a great time to invest. And that's the environment we're in today. And as another example to that, our lending strategy is we are a construction lender. We are lending on construction projects. I just said almost no traditional banks are lending in the space. We are, and we're scaling our lending business significantly. Which again, you say, well, if all the banks think it's not a good time to do it, isn't that a sign? No. That's absolutely the time to lend, because right now we're able to lend to the most experienced developers, the most experienced sponsors on the best projects, the best real estate, and earn higher yields than we've ever earned on our loans, right? So it's a great time to lend on ground up construction projects for all kind of the fundamental reasons I talked about. We're lending to really experienced developers who are buying land at a big discount, who are getting access to better vendors, better contractors, better labor, executing faster, and are going to be delivering projects into markets when there's incredible demand. And we're not competing as much, with banks. 2 years ago, if we were lending out at 9% rates on ground up construction projects, banks were lending at 3 1/3, right? 3.5% rates. It was very hard to compete for developers of DLP size. It was very difficult to compete with that kind of bank financing, and the banks were lending at 70-75% loan to value. Now, if you can get a bank to lend to you, which is very hard to do, they're at 55% leverage, and their rates are now at 8.5, 9%. When we're lending now at 12.5%, we can be really, really competitive because we're lending at 65-70% loan to value. Which is still a great place to be. On a $50 million project, that on a typical $50 million project, our sponsors putting in $12-15 million of equity into that project before we ever put in a dollar as a lender, to very experienced, seasoned investors.